Alright guys, we are back again with another video this week, and we'll be doing a trade breakdown on my longs that I caught on the pound CAD buys. And obviously you guys know my complete approach to trading, and I think this will be the easiest approach that you can see and watch on price delivery. Jumping right into the beginning of the video, what we always do here is I want you guys to just monitor and annotate this naked chart. We're looking at EuroCAD on the left and GBPCAD on the right, and these are weekly charts, so mark up your annotations from what you see here in this area of price action, and then the next slide I will show my annotations as to what I have for my view. So I hope that you guys had a general understanding or got relatively close to what I had on my annotations of price. And as you can see, looking at EuroCAD on the left, this is our dealing range from this swing low to this swing high, and our retracement was down into discount, and we reached a discounted weekly PD array, this internal range weekly bullish fair value gap. And as you can see, inside of that weekly internal range liquidity pool, we created SMT divergence. So you know that our steps here is step one, wait for price to get into a higher time frame key level, the internal range liquidity pool, and then step two, you want to see SMT divergence occur inside of that weekly internal range liquidity pool, which is exactly what we had here. If you look at the corresponding lows, we made a lower low on EuroCAD here. We made a higher low on GBPCAD here. Now, if you guys follow me on Twitter, you should know that we have been following the CAD crosses for actually quite some time now. And I say this because what we were looking at was, for the previous week, we were creating a swing low in a higher time frame PD array like we did here. So we had our 3 candle formation move, and our first draw on liquidity on EuroCAD was the internal range liquidity pool here in premium of this range from this swing high to this swing low. And this was also an external range to internal range move because we ran these external range lows. So the external range run was into a weekly internal range liquidity pool within the bigger dealing range, as you could see here. So we had a clear view on bias on our weekly chart for quite some time, knowing that price was going to be moving to that higher time frame weekly external range liquidity pool. So we had our confirmation of our weekly swing low formation in that internal range liquidity pool, and now all we need to do next is drop down to our properly aligned time frame and watch market structure align itself with the draw on liquidity. And in my view, I want to always look for longs on the stronger asset, and in this situation the stronger asset was GBPCAD because we made the higher low. So I'm going to focus and prioritize longs on GBPCAD rather than EuroCAD, since EuroCAD made the lower low. So now let's move on to the 4-hour chart and see what we have here. So again, I wanted to start off with a blank chart on the 4-hour, and trust me, I know already this doesn't look like the cleanest market structure in regards to what we usually see, but do your best and mark off your annotations, and then the next slide I'll show mine and we can compare and contrast as to when price was actually initiating its buy program to where we could anticipate our draw to that external range high, which is resting here. So here is the illustration of our 4-hour market maker buy model where price reached that weekly internal range in discount, and as you can see, we did have market structure aligning itself with the draw, because every single time we would accumulate price, we would send a wick down running buy stops pushing up higher, and then once we would push up price higher, this was a dirty area of price, and I was not incorporated in this price action. I waited for more direction and more clarity, and what we had was more direction and more clarity later on in the week when we had the confirmation of that weekly swing low in that weekly internal range discount. So we continued to run buy stops, push up higher, traded down into this 4-hour bullish fair value gap, pushing up and then respecting bullish PD arrays, this internal range liquidity pool, And again, our concept of internal and external range is a fractal concept. Price taking out these external highs, retracing into a 4-hour range discount and reaching into this 4-hour internal range liquidity pool, and then price continuing higher, running highs. And then the good thing here is we closed above this up close candle here. And what I usually say about when we are framing our market maker models, if we look at the sell side of the curve, we're usually going to reference any up close candles in swing highs, drag them out in time onto the buy side of the curve. When we initiate our buy program, we look for PD arrays to form inside of that POI. And in this situation, we created a stop hunt resting here that was also SMT divergence with EuroCAD. So now what we're going to do is look inside of this fractal of price to see if we could frame our entry for what I took on my long position for my first take profit to this high, and then leaving my runner to the weekly external range liquidity pool high. So again, dropping down to our 15-minute chart, because we're doing time frame alignment, we go from our weekly to our 4-hour to our M15. So mark up on your charts what you see on this 15-minute naked chart of how price aligned itself to eventually reach that draw on liquidity to this high, and what you see compared to what I show you next on the next slide. All right, so with my annotations of the chart, I hope that you at least had somewhat of a similarity to my annotations that I have here. And in today's price action, we created SMT divergence with EuroCAD running these flat body lows on the 15-minute chart. So this was used as a draw on liquidity. Price just sweeped it, running buy stops, and after we created SMT divergence at our 15-minute low, we broke structure, and this was all inside of that 4-hour mitigation block. So price cleared, closing above that high. So this down close or up close candle, the last up close candle before sweeping liquidity, then breaking structure, is labeled as our breaker block. This is what I used as my long entry to take to these resting highs. And I do have a runner in place that is to the weekly external range liquidity pool. And the profit that I locked in was just about 1.8% of my account. And you can see here on my left, this is my MetaTrader 5 executions. I took profit at that high, and this is the post that I made on Twitter. And if you guys aren't following me already, I'll leave a link in the description to all of my socials below. But this is just, in my opinion, the most simplistic way to view price: internal and external range liquidity paired with SMT divergence and using your proper time frame alignments. And every single week I will be posting any trade breakdowns that I see with the most simplistic view of price delivery. And what I say, that all you really need is old highs and lows and fair value gaps to make price and draw on liquidity as obvious as possible, so that you have high conviction plays and you're always on the proper side of the market when it comes to identifying your draw on liquidity. You will be able to see how easy this could be if you have the proper discipline and the right risk management. Now, I hope you guys all enjoyed this video. And again, if you have any suggestions for future videos, please drop them in the comments below. And for the rest of the week, good luck, good trading, and I will see you guys all in the next upload next week.